Thank you for joining me this Friday, the 20th of October. I'm Grady, market analyst with Bell Direct, and this is the weekly market update. All eyes were on key economic data out of China this week to determine the recovery outlook for the world's second largest economy and the flow-on impacts of such a recovery into global economies, especially Australia. If the data had indicated the weak recovery continues, the outlook for Aussie commodities and general exports would have been dampened further into FY24. However, thankfully for the land down under, the data came in above economists' expectations and boosted sentiment around China's recovery gaining some ground. China's GDP growth rate expanded by 4.9% year-on-year in Q3 2023, which is cooler than the 6.3% growth in Q2, but was above market expectations of a 4.4% rise, indicating the Chinese economy is finally expanding post the end of pandemic lockdowns earlier this year. China's retail sales data year-on-year in September also rose by 5.5%, which is a significant jump from the 4.9% recorded in August, and also supports the idea that consumers in China are back to spending again post-pandemic. And Chinese industrial production year-on-year also remained at 4.5% in September. However, this was above market expectations of a 4.3% rise. What this data means locally is that the outlook for Australian commodities, especially iron ore, is brighter, as China is Australia's largest trading partner. This drives the price outlook for iron ore and therefore revenue growth for our big Aussie iron ore miners as industrial production and building in China regains momentum. The Chinese government also made a rare mid-year revision to its national budget just last week in a bid to stimulate economic recovery. This move, combined with interest rate cuts, are also assisting in growth and recovery in the region. While companies with exposure to the region were hurt during the August reporting season, we may see some revised outlook announcements in the near future as companies expect a ramp-up of demand in the region, which is a positive for locally listed stocks that operate in China. Elsewhere, we have started seeing first quarter trading results and updates released both locally and third quarter results released in the US over the last week, which sparked mixed reactions from investors based on company performance over the last quarter, especially on the guidance front. Luxury online fashion retailer Cettire fell 3.4% on Wednesday, despite the company doubling its revenue to $167.4 million and active customers rising 69% on the prior corresponding period in the latest trading update released on Tuesday, against tough economic conditions. The market reaction extended into a further sell-off of Cettire shares on Thursday, as investors may fear the higher for longer interest rate outlook may hurt demand for luxury fashion items. Bapcor fell over 12% on Tuesday after the auto parts retailer posted a trading update outlining first quarter performance is below expectations due to slowing sales growth and current margin pressures faced in the high interest rate, rising cost environment. Scali shares also rose on Thursday after the furniture retailer provided a first half profit guidance that topped market expectations despite trading still trending downward but slowly improving. And Netwealth fell over 7% on Thursday after the financial services provider released a first quarter update, including a sudden rise in fund outflows from high net worth clients. Over in the US, quarterlies have seen some stocks experience sharp declines, including United Airlines, which announced softer than expected guidance, while some banks, including Bank of America, rallied after posting better than expected results in the high interest rate environment. The key takeaway from the reporting period so far is that outlook is the key to providing investors with some certainty in the tougher economic conditions expected over the coming months. Locally, from Monday to Thursday, the ASX 200 fell just shy of 1%, weighed down by the technology sector, tumbling 3.74%, while energy stocks offset some of the heavy losses, with the sector gaining 2.5% over the 4 trading days. The winning stocks on the ASX 200 were led by Whitehaven Coal, jumping 11.5% on a $3.2 billion acquisition of BMA's metallurgical coal mines, while Capricorn Metals rose 11.2% and Weebit Nano rebounded 10.3%. At the losing end, Credit Corp Group tanked 33% after the company announced it expects a more than 50% reduction in FY24 profits. On the broader market, the All Ords also fell 0.98% this week as Lithium Power International soared 23%, while Tyro Payments fell 18.4%. The most traded stocks by Bell Direct clients over the 4 trading days were Woodside Energy, Carsales.com, Monash IVF, Boral, News Corporation, Sigma Healthcare, Aussie Broadband and O-Media. Clients also bought into ANZ while taking profits from BHP Group. And the most traded ETFs were led by Vanguard MSCI Index, International Shares ETF, Vanguard Australian Shares Index ETF and Global X Physical Gold ETF. Looking at next week, Australia's all-important inflation rate data for Q3 is out on Wednesday, with the forecast of a decline to 5.1% from 6% in Q2, which would provide further support for the RBA to hold and even look to cutting the nation's cash rate in the near future. Overseas, UK unemployment data is out on Tuesday, while US GDP growth rate data for Q3, US core PCE price index and personal income data is also out later next week, which will all provide an insight into how the Fed's aggressive interest rate stance to date is playing out in tackling inflation in the region. And that's all we have time for today. Have a wonderful Friday, a great weekend, and as always, happy investing.